Centralized, centralized to decentralized? That's a big question. If you want to learn more about it, please approach your speakers. Well, our next set of speakers are going to tell us everything about the public and private partnerships and what is the future of the digital currencies. Please help me in welcoming on stage our moderator, Cart Yantam, Dean of School of Business and Management at Hong Kong University of Science and Technology, in conversation with Alessandro Gullo, Assistant General Counsel at International Monetary Fund, and Bojan Obradovic, Chief Digital Officer at HSBC, Hong Kong. Please welcome them.
So good morning, everyone. Welcome to this panel discussion on private-public partnership and the future of digital currencies. My name is Kai Tam. I'm the Dean of the Business School at HKUST. Together with me this morning, we have two distinguished panelists, Mr. Alessandro Gullo. Mr. Gullo is the Assistant General Counsel at the IMF Legal Department. He leads the Financial and Physical Law Division and advises on monetary, financial, and physical legal reforms. He has been involved in advising IMF member countries on legal reforms to their financial and physical law frameworks. So welcome, Gullo. And then we have Bojan Obradovic. Mr. Obradovic is the Chief Digital Officer at HSBC Hong Kong. He is responsible for developing and executing HSBC cohesive digital banking strategy with a focus on digital asset and currency, emerging technology, and digital innovation. So welcome, both of you.
Thank you.
Now, this panel is about money, and also private-public partnership. So I have a chance to visit the British Museum in London about a month ago and saw many different forms of money that humanity has used in the past thousands of years, from animal bones to a seashell, and then starting about like 3,000 years, we have metal coins. I also learned that the fiat currency actually was issued by China about 1,000 years ago in the Song Dynasty. So money has been evolving in terms of function and also the value. And technology plays a very important role in this development. If you look at from a historical perspective, many innovations of money have come from the private sector. And regulation, central bank arrangement is a very recent arrangement in the history of money. So my first question to Mr. Gullo is, well, public-private partnership in the money have existed for a long, long time. So do you foresee any changes in how such partnerships are conducted now?
Thank you, Professor Tam. It's great to be here. So you're right. I mean, we have lived in a dual monetary system for a long time. So public-private partnership is not new. Cash is issued by central banks, but distributed by commercial banks, with some exceptions. Hong Kong, I think Bojan will touch upon it. We mostly make payments nowadays with commercial bank money, so deposits, for instance, but central banks oversee payments and settlements of those transactions. And so there is already a partnership there, right? It's perhaps an implied, tacit partnership where the public sector is there to provide access to money in the public interest. The private sector is in the interface with customers and drives innovation. And this partnership is based, of course, on the safety net, right? So access to deposit insurance, central bank liquidity, regulation and supervision and all of that. And it is perhaps an implied partnership. It has a fundamental objective that is to ensure one key principle, that is the singleness of money. The fact that you can trade at par value private monies and public money. There's no difference. There is a seamless integration between the two. And as long as this premise holds true, then that's where people have trust in money. Money is a social construct, is a social convention. Cash, it is cash because we believe it is cash, right? So, and the singleness of money is preserved through this partnership nowadays. So what is changing? I mean, there are definitely new forms, as you say, of partnerships. Things are more complex now, and perhaps there is also a deeper intertwining between the public and the private sector. If you look, for instance, at CBDCs, now there's convergence towards the so-called two-tier model, the intermediated model, where banks or financial intermediaries play a role in the distribution of CBDCs. There are other forms of partnership, such as on payments or regulatory sandboxes. So there is, I think, a closer now interconnection in the digital forms of new money. There are new forms. The principles, though, are perhaps the same. The public is there to ensure stability and trust. The private sector is there to provide innovation, but it's a partnership, so it's a two-way street. Public sector has to be very agile and adaptable to understand what are the market needs. Private sector must contribute to the public good of financial stability. So it's really a two-way street between the two. The principles are perhaps the old ones, but the forms are complex and much deeper now.
I see. Okay. Well, okay, very good. Okay. So, okay, actually, okay, money, okay, is the same. Okay, whether it is private or public. Okay. So, I'd like to move on. Okay, to probably ask the same question. Okay, to Bojan. Okay, but in the context of Hong Kong. Okay, HSBC has been operating in Hong Kong for more than 150 years. Is one of the note printing bank in Hong Kong. Okay, I opened an account in HSBC when I was a primary school kid. So, what do you think about this private-public partnership? This is still important, or is it even more important now than before?
Sure. Thank you, Professor Tam, and thank you to the HKMA for inviting me to this esteemed panel. And perhaps it's appropriate, since we're talking about public-private partnership, to also mention that FinTech Week is an excellent example of public-private partnership. Obviously, the public sector, the government, are the overarching organizer of this, and the private sector is essentially executing this through sponsorships, through all of these events that are taking place, and through the eventual execution. But when we're talking about money, yes, very important is the public-private partnership, and maybe I'll echo some of the points that were mentioned by Alessandro. If we take a step back, first and foremost, and just think about the roles that private sector plays versus public, and where they're really good and where they excel. When we think about the private sector, and in particular in financial services, private sector faces off to individuals. It does the know your customer, KYC, risk management. It is there to provide banking products and services. And it is innovating all the time, thinking about how do we make banking easier for many of the individuals who are using banking services, and how do we help them grow their wealth. And when you look at the private sector, what you also see is a lot of competition. What competition breeds is innovation. And this is really important because you're always innovating, looking for new products and services that are going to be making a difference. On the other hand, the public sector plays a fundamental role in ensuring that there is trust in the overall ecosystem. This is what the public sector brings when you look at across the industry in terms of the financial services industry and beyond that, because you also have, besides bank, non-bank financial institutions now offering various forms of private money services, which are, of course, being used by millions of users globally. So it's really important that we have somebody that is overseeing this from ensuring the trust perspective, but also ensuring that there is that singularity of money, that everything is anchored in the system, and that the interests of the society are looked at, because sometimes individual commercial interests of individual institutions may not be the best when you think about it from a holistic society perspective. And if we just reflect on Hong Kong is a great example of public-private partnership on a couple of fronts. Number one, Hong Kong is one of the very few markets around the world where commercial banks actually issue notes. So HSBC is one of the 3 note-issuing banks here in Hong Kong, and 65% approximately of all money in circulation today is issued by HSBC. And actually, since we're talking about digital currencies, if you think about that $100 bill that is HSBC issued, that is a paper version of a stablecoin, essentially. So that's an example where commercial banks are issuing notes, but in the background, of course, we're working very closely with the central authorities to make sure that the system functions for Hong Kong. And the only other one I would mention is FPS is a good example where when the Hong Kong MA looked across the entirety of the industry, they've identified efficiency improvement opportunities in the payment landscape, and they've implemented FPS. And commercial banks like us in the private sector are, of course, enabling our customers to use FPS services.
Okay, thank you. Okay, so I guess based on the discussions that we have so far, so both the private and the public have important roles to play. And I think this leads to the next question. Now, what exactly this role? How the private and public sector work together? So how do you see a successful partnership? I think mentioned earlier on, well, the private sector is more innovative, and the public sector are more on the risk control, regulation, make sure that the larger society actually benefit from this innovation. So what's your view on this? Mr. Gullo first, maybe.
So I think it's very important to preserve the role of both the public sector and the private sector so that the one does not crowd out the other. And there is a balance there, and there are different ways to achieve that balance. Incentive structures and possible frictions are relevant there. So for instance, if you look at the discourse now on CBDCs, right, what are the possible incentives and frictions? One of the main concerns is disintermediation of the financial system, right? So that's where I think countries are now designing limits on CBDCs holdings. Where those limits should be put is a matter still of a debate, but if you look at the digital euro, there is a proposal, there are some limits there. Or also no remuneration on CBDCs. Again, there are different objectives there, but one of the objectives is to avoid the crowding out of the private sector. Again, there's a balance there that I think policymakers are trying to strike. Another, of course, area is fees. And again, on one end, countries, the point of CBDCs is that they should be used by the wider public. They should promote financial inclusion and all of that. At the same time, they should be incentivized, right? So that's why I think the discussion on fees and charges levied on the use of CBDCs is relevant. And countries are following different approaches. If you look, for instance, at China, the ECNY project, countries are looking at limits on charges and fees in connection with the basic provisions of payment services related to CBDCs. I think the PBOC noted that it will not charge intermediaries or end users. Intermediaries will not charge end users, but may have the option of charging merchants. So again, the approaches are different, and in the design of this healthy partnership, one should look at possible revenue streams from the use of forms of private and public money. At the IMF, what we hear increasingly, we've been advising more than 50 countries on CBDCs, on thinking through the issuance, is that there is a possible reputational risk if there is a low takeoff of CBDCs, right? So, and that's why the private sector has a huge role in making this a successful case study and a story. So in as much as kind of the public sector is key, as I was saying, in the effective use of private money, the private sector is actually extremely relevant and crucial in the successful use of public money. So aside then from the incentive structure, what are the other key ingredients of this healthy partnership? Definitely, consultation and collaboration with a wider range of stakeholders. If you look at all of the pilot projects, for instance, on feasibility of CBDCs or sandbox and so on, the HKMA, for instance, has been very active on many pilot projects. There was, we discussed yesterday, Enbridge, there are many others. There was one project, I think a couple of years ago, Project Jura, where one of the few cases where it was tested, the kind of the real value transactions, the payment of that was tested. But countries are very different. They have different needs, and I think it's important then to clarify what the partnership aims at, right? We see, for instance, at the IMF that some of the policy objectives, maybe some of the drivers for CBDCs, like financial inclusion or the decline of cash, may be relevant in some countries, may not be relevant in others. Ultimately, I think it's important to think through, in the design of this partnership, what do we want to achieve? What is the objective? And preserving monetary sovereignty is actually an important objective in many countries. And then, once you distinguish the objectives, you've got the means to the end, right? And that's what the partnership between the public and the private sector can help on. And that's where also the discussion on transparency and accountability becomes relevant. Who is responsible for what? What is the role, what is the responsibility of the private sector? What is the responsibility of the public sector? Within the public sector, who is accountable for what? The central bank vis-a-vis the government more broadly. So, accountability, transparency, consultation, communication, all of these, and incentive structures, those are key things for the successful partnership between the two.
I see. Okay, thank you. So, Bojan, what's your take on this question?
Yeah, it was really insightful to listen to Alessandro, and actually I fully agree with most of the points mentioned here. But there's a few points that I would say are very important in terms of getting right. So first and foremost is a framework that turns into regulation, that actually defines clarity of rules, clarity of engagement, clarity of accountability, a system that instills trust. When we're talking about money, this is very, very important. This is the heart of economies around the world, heart of people's livelihoods. So for us, having a very strong regulatory framework and an environment where money operates is a very important part of the success and ingredient. But how do we get there? Well, we get there through dialogue, and I would say that's the next very, very important part of the equation here. Dialogue before the frameworks and regulatory regulations are established, and dialogue, continuous dialogue after they're established to optimize those regulations and continue to, as matters continue to evolve. So we can just look at a number of examples as to where this is really coming to light. As we're now, for example, working on, Hong Kong is thinking about central bank digital currencies in the retail sector, and they've just successfully concluded the EHKD pilot. There are a lot of discussions that are taking place between the private and public sector around what is the future of digital currencies in Hong Kong, taking into consideration all of the factors that are necessary for you to determine what is the best approach forward. And this is not an easy topic. It's very complex for many people to understand, and it's also very complex when you think about the holistic ecosystem. There are many things to consider, and every consideration has to think about what is the actual consequence of this on perhaps something that exists today. And so that constant dialogue and feedback loop between the private and public sector, it's what's fundamentally important. And just thinking back to the key point that I mentioned in the first question, which is what are the two different roles between private and public? That's the framework for the dialogue to take place. So we are providing feedback in terms of, well, here's how we think this could work and where we think the central bank could play a very important role. And likewise, we're getting the central bank's view to come to some sort of a conclusion. And it would be also important for us to highlight the role of academia in this, an important role that academia plays. And I'm really delighted that HSBC and HKUST, in particular the business school, are big partners in this space to think about, from academic perspective, what are the societal benefits and impacts of any of these evolving technologies, central bank digital currencies, quantum computing, generative AI, artificial intelligence overall. That is an important aspect that needs to be brought into this, and I see it as a big ingredient of success. And for us at HSBC, we're delighted that we have that established with the HKUST, and we're also delighted that to see academia playing a key role with the HKMA in defining from academic perspective what good looks like.
Yes, yeah, I do agree. Okay? In fact, CBDC, digital currency in general, actually has a lot of intellectual elements into it. So in the interest of time, let me zoom right into our the topic of digital currency. In fact, we mentioned about this already. Now, very general question. What do you see the future of digital currency, given the current trend of development?
So on an optimistic note, hopefully the future is one of coexistence of different forms of money, of additionality, and not one of parallel universes, right? And we're increasingly rely on concepts such as integrated liability network or regulated liability network, unified ledgers, seamless integration of layers, shared platforms. All of those concepts are about basically the principle of singleness of money and the coexistence between these forms of money. If you look at some of the recent proposals on the digital pound in the UK, for instance, what they do is they build a bit of a layered architecture where you have a public infrastructure, the core ledger, and then you have a customer interface layer where the payment interface providers, the PIPs so-called, are interfacing with the customers. And they're passing instructions to the Bank of England to preserve anonymity. They provide a kind of a digital pass-through model in the interface with customers. So there is really a coexistence there. Different solutions in different countries again, but questions are relevant in the future of digital currency. I mean, who is owning the ledger? Who is operating it? In the Bahamas Sand Dollar, I think it's the central bank which owns the ledger. In the Swedish, they have a e-krona proof of concept. There's a private intermediary who owns part of the ledger, makes update to it, subject to the central bank approval. There are questions about the roles of all of these actors, which is important to clarify. That's really the key point about the intermediated model of CBDCs. It's clear now if they're going to be CBDC is going to be through financial intermediaries. But what is the role of financial intermediaries? I mean, the key point for the CBDC is it has to be a liability of the central bank. Otherwise, it's commercial bank money. So what is the relationship between the central bank and the CBDC holder? What is the role played by payment system providers? So those are areas where law, policy, and technology have to talk with each other, and the legal characterization of the roles of all of these actors is increasingly relevant. Another concept which I think is key, if we think about coexistence and your question about the future of digital currency, then what becomes paramount is interoperability, right? So even nowadays, we make payments, we make use of money through several means. It's very likely that those means will just multiply in the future. So then it's absolutely important to ensure that there is interoperability between all of these payment systems. Again, you see this in the CBDC discourse where central banks will have to ensure that the standards governing public money transactions will have to be compatible with the standards for making private digital payments. That's again something that, for instance, the EU they're trying to do. And you can see interoperability in payments, in the payment space, which is again is a huge area when we think about the future of digital currency, domestically and cross-border. And again, interoperability becomes key if you look, for instance, at some examples like India. I mean, the so-called stack model where you have got different interfaces, payment, ID, data layers kind of being interoperable. Or cross-border payments, where the major effort is now really to link domestic fast payment schemes among themselves. Cross-border payments is a huge area for us of focus at the IMF, and that's one of the real areas of improvement for all of us, right? And so maybe the last point on the future of digital currency, I think we all focus a lot, and rightly so, on products and tokenization. I think we should also pay a lot of attention to platforms, infrastructures, ledgers, these concepts. They become key. Some policymakers have drawn analogies with old technology where they have got the VHS at the time and the manufacturer has to make those products compatible so that they can be read by all possible users. You can think about a digital infrastructure like a highway where the public sector in this partnership provides the core infrastructure with basically some safety rules, and then you've got all sorts of cars driving on the highway. And so I think the success of the future digital currency will really hinge a lot on this, on how well designed and governed will be this digital infrastructure. And of course, on also much broader efforts of the public sector in conjunction with the private sector to promote, to exclude to promote digital inclusion, right? And digital literacy, which is also key for all of that.
Okay. Well, very well said. Okay. So, Bojan, okay, what's the future of digital currency?
The future? So, I was on a panel yesterday to talk about the future of digital money, where we had quite a diverse group thinking. But let's just align on the three types. Maybe we'll put cryptocurrencies outside of the, just in the interest of time. So central bank digital currencies, as the name implies, central bank liabilities, over 130 markets around the world, central banks represent 98% of world's GDP. 19 out of 20 G20 countries are exploring some form of central bank digital currency at both wholesale and retail levels. And Hong Kong, of course, has been doing that now for 4 or 5 years. We have, if we think about central bank money today, less than 10% of all money today is central bank money. The vast majority of money is commercial bank money. That is 90% and plus is commercial bank money. So that's why the second type, commercial banks are looking at what type of a digital currency are they going to actually issue, and tokenized deposit is a conversation that's now actively picking up steam. And the third type is stablecoins. Those are, let's say, non-bank financial institutions providing private forms of money. What is common across all these three, to a large extent, not in all cases, of course, is that they are all looking to use distributed ledger technology or blockchain as the underlying platform capability that essentially tokenizes money and allows you to move that money across the distributed ledger network. And that's essentially their main commonality. Now, my view is, so this is a very complex topic, of course, and there are a lot of competing views, but I think for the next number of years, we will most definitely see coexistence. I mean, that's already happening. We have some central CBDCs implemented. Of course, China is the largest market that's implemented this right now. We have some tokenized deposits on the way, and we have stablecoins, $125 billion worth of stablecoins issued. So I think over the next 5+ years, we're going to see that coexistence. But answering the question of the role of the CBDC is going to be very important, and I think it's going to potentially vary market to market. So central bank digital currencies definitely have a benefit of providing digital money to the underbanked or unbanked society, which potentially is not such a big issue in Hong Kong. where the vast majority of the population is well banked and has access to many different type of digital payments. And it may be different in Hong Kong to some of the other jurisdictions. So each jurisdiction is probably going to be making these decisions based on their own motivations and based on their own needs. But I think everyone is agreeing on a couple of things with respect to CBDCs, that they are very good to anchor all money, to ensure singularity of money, no matter which type of digital currency you are referring to. That's where I'm not seeing a lot of disagreement so far. And secondly, in the wholesale CBDC, this is proving to be for cross-border trade settlement between multiple jurisdictions. And with Project Enbridge, of course, here in Hong Kong, we've seen that come to life. And the question then becomes between tokenized deposits and stablecoins, which, if I'm being a little bit candid, there's going to be some competition there, and that's quite natural. And so innovation is ultimately going to be the question of, actually, this concept of programmability is what's really exciting about digital money. And what is programmability? It's essentially smart contracts that either automate manual processes or add new capabilities and features. It's innovation. When we project this 5-10 years down the line, it's that innovation at scale that's potentially going to make a difference in terms of the retail sector, at least, as to what the future of digital currencies are. And may innovation win in that regard.
Okay, well, thank you very much. Okay, I noticed that the timer has stopped actually 5 minutes ago. Okay, so we had a very, very rich discussion on a very, very important topics. So my key takeaway is public sector collaboration continues to be very important. And digital currency, CBDC, have a very bright future. Well, that's my takeaway. So please join me to give a big hand to our two distinguished panelists.
Thank you very much to our panelists. And now, going from CBDCs and how can we have an open